This is Mr. Wilson going through exercise on accounts receivable transactions. I've only got 15 minutes, so I'll be going fast. Press pause at any time to enable you to catch up. What we've got here is some transactions following through page 205 through to 207. I'd like you to do this on Excel though, so you get practice of using Excel. This will be the answers. The answers for the others will be here, and you're expected to do these as well. Firstly, what we've got is we've got the opening balances of 3 accounts receivable. We've got the accounts receivable ledgers, closing balances, accounts receivable control, and the transactions that happened during the month. You're expected to put all this information into all of this part here. We're going to start off with the opening balances. We've got 3 opening balances, 3 people that owe us money. They are F. Smith, Y. Taylor, A. Jones. What we're going to do is we're going to type the 10th, 1st of October. If yours doesn't do that when you type it in, type 10/1, you could have an American spreadsheet there. So we type 1st of October in balance, and then because the 3 of them have an opening balance, we'll just go, try that again, highlight those ones, Control C, and then Control V. So we're copying and pasting, so we don't have to write it in more than once. F. Smith has an opening balance of 540, and type DR there, and then put the mouse onto that corner and just fill that down. So we've got debits all the way. Y. Smith has an opening balance, type equal, click on Y. Taylor's opening balance, and again DR, and fill that down. And A. Jones has an opening balance of 270, DR, and fill down. So we emptied the opening balances for our 3 starters. Then what we're going to do is go in order of date order. Your book doesn't do that, but it's a preferred way of doing it because it shows the balance at any time. I'm going to go each person at a time. Start with F. Smith on the 5th of October. They had sales and GST. And we're going to put it in the debit column because it increases how much they owe. A debit and a credit are higher debit, so we'll add those 2. Next one for F. Smith, try and find the order. We've got the 15th here. And on the 15th, they paid us. So because they paid us, we're going to put bank. And that will decrease how much they owe, so in the credit column. Equals. And we're going to minus that, 990. Basically, they paid our opening balance, which is good. And then F. Smith in the 28th. We only need to type S because we've already done that, which is pretty handy. We sold more stuff. So we'll reference that across to that 360 and add that. So F. Smith's account has now gone up. That's their closing balance. Y. Taylor had an opening balance we've got. So in date order, we can see the next thing maybe is the 12th, 16th, 28th. On the 12th, there was sales, so we can just write S again, and that'll all come up for us. And we'll reference it across to Y. Taylor. Because we sold, they owe us more, so we add it on. On the 16th, we see that we charged them freight. If we're charging them freight, we'll have to add GST to that as well. And because we're charging them, they'll owe us more, so we'll add it on. Equals at 23. A debit and a debit's a higher debit. And on the 28th, you'll see we sold them more. Again, if you put the S, it'll come up. The sales and GST. Am I missing one? I'd seem to be. I know, that was not right. They've paid us, so we'll type bank. That's better. And Y. Taylor, 180 they paid us. So again, they're paying their opening balance here. If they've paid it, it'll decrease how much they owe. By Taylor, we've got 4 transactions, opening balance plus 1, 2, 3, that's right, good. A. Jones, got the opening balance here as well. A. Jones, if we look through, 24th is a transaction. And that seems to be all. So write 24th. And that's sales in GST. That will increase how much they owe. I'm a bit worried they haven't paid off their opening balance here. Add together. We'd expect them to pay off the opening balance on the 20th of the month. So that's a bit of a concern. A. Jones, I can't see anything else. Nope. Good. That leaves us with J. Hobbs. Now, J. Hobbs, and D. McLeod, sorry. J. Hobbs is a new one, so they don't have an opening balance. So the first transaction with J. Hobbs is here on the 10th. And that transaction was for issuing invoices, so sales and GST. That will add to how much they owe. I'd be quite concerned with this. This is quite a large amount. This is larger than all the others, so I would hope that there's a decent credit check that's happened on this one. Caps lock. J. Hobbs, we can see that 1800 there. We've got 2 more, both happen on the 18th. First, we'll do the credit note. So the credit note is J. Hobbs returning stuff. So we type sales returns and GST. We'll issue a credit note. That'll decrease how much they owe. They don't have to pay for what they've returned. And this one here is that we have, so we're looking at J. Hobbs. They've paid some money too, so on the 18th. So we'll put bank there. And again, that will decrease how much they've owed. So we'll go 1620 minus what they owed. Again, a debit balance. Lastly, we have another one here. We've got D. McLeod, again a newbie. D. McLeod on the 19th. Again, I would have hoped we've done a decent credit check for D. McLeod. You'll see that we haven't when we come through to this. But the sales and GST. And that'll increase how much they owe. So D. McLeod, 19th, 630. In the debit balance. D. McLeod on 22nd returns some goods. We know that because it's a credit note. And we issue that credit note for returns. So again, sales returns and GST. And it will decrease, a credit will decrease how much they owe. So D. McLeod here, credit note, 45. And the problem here, we've got D. McLeod's a bad debt, so that's on the 31st. I will type bad debt and GST. That means we can claim that GST back. We're going to reduce the whole amount that they owe. We've written off the whole amount in that case. And so that closing balance will be 0. Now what we do is we enter the closing balances. So the closing balance of F. Smith at the end of the month is that. The closing balance of Y. Taylor, end of the month. Closing balance of A. Jones, end of the month. Closing balance of Hobbs at the end of the month after they paid that wonderful 1,000. And click on this auto sum. This auto sum will add up everything above it. So the total we owed at the end is 2,083. Then the last part of this exercise is to do the accounts receivable control. You'll see that on page 207, but I'd like you to do it here as well. So the accounts receivable control is a story for the whole month. It's about all the debtors, all the accounts receivable together. Get an opening balance. I'm going to spell that right. And the opening balance, I'll click on that auto sum again, and we'll add up those 3 and enter. So that's how much we owed at the start of the month. Put a DR there. Can fill that down. Then we're going to look at, firstly we do the sales. And to get that will increase how much our customers owe. So we'll auto sum again. Auto sum. And we're going to highlight all the sales that were made. Just left click all that and add that together. So if they hadn't had any other transactions, they'd end up owing us 4,590. We don't have to write the date again because it's already there the 31st. We'll do the credit notes, so that's sales returns. I understand some of you will just click on that there, equals that'll be fine as well. We're going to add up all our sales returns, which is just those two, auto sum those two. And that'll be taken off how much they owe. Next one is we've got money coming in, so that's called bank. And all the money, that'll decrease how much they owe. Again, auto sum, highlight the 3, enter, and we'll take that away. We've got some freight there. Normally we'd do those on the dates that they happen, but we haven't, so we'll post them at the end. Freight. That's going to increase how much is owed because we're charging freight. Actually, you better add the GST. And the last one we've got is bad debt and GST. And that will decrease our accounts receivable. And that's that figure there. Now, this is where we cross our fingers and hope it balances. So this figure here, the closing balance of our accounts receivable control, should equal the closing balance here. If you've done that, then it's right. So your task now is to go and complete those other exercises. Ka kite, well done.